Welcome to the Real P&L Trading Show, where I share my real P&L on 3 accounts and share my proprietary SafeWheel options trade system for free. I want to make sure that everyone can hear me okay, so let's test that audio there. Type in the chat that you can hear me as I move forward here. Also, be sure to post any questions you might have so I can get to those before the end of the broadcast, because there is a slight delay when you post your questions compared to when I see them. Charles says he hears me. Thank you, Charles. And Eduardo, thank you. All right, let's get into what happened last week. Thank you, Devin. Last week, the earnings edge traded Home Depot, and you can see made $720. You can see my P&L for my account, 10,249. So let's put that into the spreadsheet here and talk about that for a minute. 10,249. Broke that $10,000 mark, which is nice, up over 100%. That's one thing that I noticed. What is SPY trading? 496.11. 496.11. Okay. So we're looking at the earnings edge. We can see that 2022 vastly outperformed the S&P. Last year did not outperform, but was close. And this year so far now I'm up 7%, where the S&P is up 4.38. And overall, since the inception of this trade, which was January 2022, where I started trading it live right in front of it. Well, I didn't trade the actual trades in front of you, but I've been showing my account right in front of you. Up 104, 105%. So I've doubled the account, where the S&P is only up 4.45% since January 2022. So doing quite well there. All right. That is the earnings edge. Oh, okay. Also the stats. So since I've done my update, which was in October of 2022, of 19 wins, 19 losses, 7 break evens. You can see my average win, 861, average loss, 491. So, 50% win rate, but you can see when your winners are higher than your losers, that's how you can come out ahead. Okay, so that is the earnings edge. Let's talk about the Premier Level 5. Let me go right to that account here. Okay, you can see everything that I'm trading in this account. Options on the ES plus some T-bills. That's all I'm trading with this account. And you can see the account is at 34,277. 34,277. 34,277. Okay, so I started this on April 8th, 2022. You can see I outperformed the S&P there. 2023 underperformed, but we have about 1/3 the volatility. So even with that, underperformed in 2023. And now in 2022, underperforming some too also. So you can see overall up about 14% versus 21. But the thing is, this is a very predictable way to trade or invest. And again, 1/3 the drawdown. So you could almost just multiply that by 3, because that would be a relative risk-adjusted return comparison. Okay, so that is the Premier Level 5. Let's get into the SafeWheel. See how that account's doing. Oh, this one's up pretty good this week too, with the market pulling back a little bit. When the market just keeps going up, and then up, and then up more, the PL5 doesn't do quite as well, but it holds in there during the bull market. All right. Let's see, I think this account. Yeah, here is the account. So I've been trading LI recently in DraftKings. So LI still down $100 year to date. With LI, it's when I first got into it, it jumped up pretty good. I think it was at $29 or $28 when I first got in. Okay, so Well, let's talk about the P&L in the spreadsheet. So 6814. Okay, down a little bit, 6814. But you can still see outperforming the S&P this year. And you can see vastly outperformed in 2022. 2023 underperformed for sure. And you get about half the drawdowns of the S&P 500, so half the volatility. But overall, you can see vastly outperforming since I started trading this in 2022, up 36% versus only 4.5%. So the safe whale is doing quite well, outperforming the S&P by a lot with lower volatility. Okay. And I've been trading the safe whale right in front of you the whole time since January 2022. You've seen pretty much every trade that I've made. Now on Fridays, I do buy that long call for $5, so you don't see that, but you know what's going on there. So what happens is on Fridays, I will roll this long call right here. I pay like $5 for it, and I do that every Friday. So that's the only thing you actually don't see what happens in this account, but it's a $5 transaction every week. Okay, so I'm coming in, looking at my positions. I see that I don't own any shares. So I know that not owning any shares, I'm more than likely going to sell a put to open. But first I want to check my put hedge. Okay, a couple things I want to know about my put hedge. One, is it under 100 days until it expires? Because if it is, I need to put on a new put hedge. And then also this put, is it close enough to the price of LI? So the price of LI being $32, so I'm going to take my calculator here. It's got to be within 70%. So 32 times 0.7 is 22.4. So it's got to be above 22.4. It is at 23. So it's barely holding in there. If LI moves up anymore, maybe it goes up to 33 or 34, I might have to roll this put hedge up and get it closer to the money. But right now it's within 70% within the money, so it's fine. Plus it's got over 100 days. So this is fine. I'm not going to do anything to that. Obviously, I put this trade on every Friday, so I don't need to do anything here. So now I'm hedged. So what do I want to do is run that traditional wheel, and I'm going to sell a put to open. I have between $5,000 and $10,000. So I'm going to do one wheel strategy and 3 put hedges. So let's go make sure we have LI here. I'm going to go into the nearest expiration. Today's Tuesday, not Monday. So the premium might be a little low, but I think LI is coming into earnings. So I'll probably get, decent premium here. So trading at $32, I want to get at least 32 cents selling a put. So the 30.50 put is underpriced. It's not enough premium. So I'm going to go to the 31. I like to go as far out of the money as I can go where I get some decent premium. Sometimes I'll go where I can get premium and then one back. So I would go to the 31.50. But 31.50 is kind of close. I like the 31 here. There's plenty of premium here, so I'm going to sell one put. And the mid price is what, 39, 40. See if I can get $40 for it. Okay. And this will be the only transaction of the day. I don't need to make any other adjustments. See how liquid that is. Pretty liquid. Filled there for $39. So now I have my put. I've sold my put. I'll come back in next week and see what happens. Coming into earnings, the stock might move quite a bit. We'll see what happens. I'll either be assigned or, LI will rise and I'll have room to sell another put. Okay, so that's the move or the trade for the safe whale for today. Okay, so let's get into any questions. Joan Janos, Carl, could you show the P&L diagram of the safe whale position? Sure. Let me get to the monitor, analyze. Let's see here. So that gives you an idea of what it looks like. Where are we trading? 30, yeah, we're trading right here. It gives you a look at what it looks like here. Obviously, we're good to the up and the downside, and we're kind of hanging out here. I just sold $40 worth of premium that I may be able to keep all of it. And so this risk graph does not include all of the premium that I've sold over the last 2 or 3 weeks. So because that premium is no longer in the position. So if you add that premium in, this whole risk graph would be higher, closer to that break even. Okay. All right. Good question there. Will, what's the strike price on the $5 call this week? It is the $5 call, 37. So I went to the $37 call for that. I mean, you never know. Maybe LI is going to get a takeover bid and they're going to go to 100. You don't know what's going to happen. All right. Some guy, EE, still a way off from the 30K in 3 years. Yeah, true. Do have a goal there, but I've doubled the account, and I'm only trading one trade a week on that earnings edge. If you're in the earnings edge course, you can trade as many of the underlyings that qualify for that week. You don't have to just trade one. A lot of people trade more than one. All right, Devin. Carl, I'm unable to get 1% for the T2 position. I'm at the bottom right-hand corner of my safe wheel flow chart. How long do I wait to get out? My put hedge is in the money. It has 150 days left. So if you are in a situation where you own 200 shares and you cannot sell any premium against those shares, you can't sell premium, then it's time to just get out of the whole position and just start over. And your put hedge, hopefully at that point, like you said, it's in the money. So it's going to help pay for those long 200 shares that are down. And so if you can't collect any premium, it's time to just get out, close everything down, and start over. I don't want to sit there with wounded soldiers and just hang out like the traditional wheel traders do. They have wounded soldiers and they just do nothing. And, oh yeah, well, we can't do anything this week. The safe wheel is not designed to avoid that. John Doe, interesting name there. Would you at any point roll the put hedge down if the stock price dropped quickly? No. I would not roll the put hedge down. I want to keep it where it is because it's going to protect me. If the stock price drops quickly, that's good. I want to get into the money with my put hedge. I want it to protect me because if I get to that situation where I own 200 shares and I can't sell any calls against it, I want that put hedge to pay me because I'm gonna get out of my position. So I would not roll it down. Jeff, when you have 100 shares, would you sell one put and sell one call? If I cannot sell the call for the premium allotted, in this case 32 cents for LI, because it's trading around $32. If I couldn't sell a call against my 100 shares, then I would sell a put and open up tier 2. So I don't think I would ever sell a put and a call in the same week. No, I would not do that. Only one at a time. Will says, I like selling the 3150 this week. Yeah, that you get more premium for it, right? Whenever we risk losing the put hedge if the stock goes up for the week. I like chasing the chance of being assigned with the closest strike price. Yeah, that's good. Uh, so your philosophy is more um, getting assigned quicker, collecting more premium, to where I might be a little more conservative and maybe not want to get assigned until further on to where my put hedge is helping me a little bit more. But yeah, that's a great, that's a different way to back test it and see what the difference is. But it's difficult to back test this particular safe wheel because it depends on what underlying. You could chose, right now we could probably choose between, I don't know how many, 5 to 10 underlyings possibly, or even more. So which one do you choose if they all qualify? And then if you back test it, who's to say that those back tests are the real back tests? So that's kind of the issue with the safe wheel and back testing it. You just got to pick one, back test it, and you'll get a roundabout average, and you'll get a good feel for what's going to happen. And pretty much any stock that qualifies is going to work according to what I've been trading it live. And I think every stock, there might have been one stock where it didn't work, where I didn't make money off of it, but for the most part it's the statistical situation where it just works. Okay. Jeff, do you ever buy more than one $5 call? No, I just buy one, and I typically pay $4 or $6. I don't pay $7 unless I can sell my existing call for $1, so I end up having a $6 transaction. Will I only want to be assigned if the stocks have been going up weekly, and I may lose the hedge for the week? Yeah, so it sounds like you're getting a little bit directional, and that's one thing I don't really think about. Well, what's the stock been doing lately? Has it been going up? Has it been going down? That doesn't enter my mind at all. Jeff, is UPST a viable underlying? UPST. I don't know. Is it in this list here? UPST. Yeah. UPST. Just a quick check. Yeah, UPST looks like it's a qualifier. Sure. Why not? I'd have to go through all the 6 filters, but yeah, so far just a quick glance. It looks like it fits a couple filters. It's liquid enough. It's within that close to the $30 range. So yeah, and it's on my list. So it's probably if it made my list, it's typically I probably put it there for a reason. Is the put hedge overpriced? Let me take a look. I don't know. Closest to 150 right here. And you want to be what, 80% of that? So 25 times 8. 25 times 0.8, $20. No, it's not overpriced. Is this thing coming into earnings? No, looks like earnings have already, no, yeah, so it's not coming into earnings. No, I don't think the $20 strike here is overpriced. I think $4 is kind of like where I kind of draw the line. So, all right. Less is more says, everyone hit that like button. I would appreciate that if you did. Will says, the meme stocks seem dead. What do you think about looking at the new Bitcoin ETFs for the safe wheel? Just for the hype. Well, I don't know what the price is. It's probably not going to be $30 or around $30. I don't know how liquid the options are going to be. So there's just a lot of factors, and it's just about fitting through those 6 filters. If it fits through the 6 filters, sure, why not? But the thing is, one thing, it doesn't have earnings And sometimes earnings are what helps the safe wheel get out of the dead positions where you're getting to a point where you can't collect enough premium and you're right in that kind of dead zone where you don't want to be. But earnings come up and it just kind of saves the day. So with Bitcoin, because it doesn't have earnings, I probably wouldn't add it to the list. Okay. All right. Any other questions? I want to make sure that I can answer all your questions. Make sure that they were answered about the safe wheel. All right, I don't see any other questions. So, in parting, I'd like to say, if the P&L is not real, what else are they trying to conceal? Okay, we'll see you guys again next week. I'll be back next Monday.